It is a new trading week. Let's head to the trading floor in Chicago, where we're joined from the CME by Scott Bauer, CEO of Prosper Trading Academy. Good to see you, Scott.
Great to be here.
All right, so what's setting us up for the trade this week? We had that jobs report on Friday, which I was told by many people, just a perfect mix. More and more Americans getting employment, but we don't have to worry about them getting paid more and inflation rearing its ugly head.
Is that really the perfect mix? I guess economically
Not if you're a
it
worker.
is. Exactly right. You know, I think what has happened over the last few weeks and in the last month or so is the market is now moving so specific on every single economic report that comes out that we've maybe lost sight of some of the overall fundamentals. Now, I know tomorrow morning we have CPI, which is the next big report that's coming out. So I think that the market may be pretty calm ahead of that because today is a pretty benign news day. But depending on what that number is tomorrow morning, we may see another shock to the marketplace one way or the other. And again, I'm not a big fan of the way the market is moving, you know, just over the last couple of weeks based on a report by report basis rather than looking at the larger macro picture.
Now, in terms of being an investor, does that present different opportunities? I mean, if you're a trader, you're in and out quickly, perhaps you can take advantage of that volatility. But for a long-term person, how do you play all this?
I think it actually does give lots of opportunity, and it gives lots of opportunity because we're seeing this increased volatility in the marketplace. Now, long-term investors, they typically may be afraid or maybe scared of volatility, and what volatility actually brings is opportunity. So I think in this kind of period of time where we're seeing this volatility, you have to have some dry powder to take advantage of when we see some of these knee-jerk reactions, some of these moves. So if we do get hit, you know, let's say we get a strong number tomorrow morning, a strong CPI number, and the market does back off quite a bit, that's probably a great opportunity for someone to, you know, deploy some of their cash back into the marketplace. So volatility is actually a really good thing. It should keep people on their toes and really creates opportunity.
When you take a look at the way the markets are right now, if we do get that pullback, are there certain names, certain sectors that you favor over others?
I think that the banks and the financials, the big financial names, are probably the safest route, at least for the next 3 to 6 months, right? We all know that we're going to see 3, possibly even 4 rate increases, you know, from the Fed the rest of the year here. But the real kicker to me is this volatility and the expanded volatility, which this marketplace has not seen for years, is great for trading revenues for the likes of a JP, the likes of a Goldman Sachs, a Citibank. So, you know, throw out the 3 to 4 interest rate hikes, which we all know is coming. I think this environment right now is really going to affect their bottom line in terms of trading revenues. I really like these big financials.
All right, so the financials make sense in this environment and the volatility. What about people who like to play the VIX? We saw people who were playing the bet that there'd be no volatility got burned very badly in the sell-off. If someone wants to wade into some sort of play on the VIX, what's the smart thing to do?
Well, you know, look at the market this morning. The VIX is actually up, what, 5% this morning when the market is up. So there's a little bit of a divergence there. I do think that the new realm, which used to be the old realm, the reality, is that we're going to now see a VIX in the mid-teens. You know, probably 14 to 18 is probably the new trading range, where over the last couple of years we saw 10, even a single digit, you know, maybe up to 13, 14. So I do think any further decline in the VIX to the mid to lower teens is absolutely a buying opportunity. And not necessarily because that means we're going to have a market sell-off, but just because there's going to be continued volatility in this marketplace. There's too much going on economically, geopolitically, you know, too many macro events happening for VIX and volatility to really come back down and settle down around that 10 handle.
Yeah, I think of, from a Canadian perspective, when we talk about the prospect of a trade war, we felt pretty good in Canada because we got that reprieve pending the outcome of NAFTA on the steel, on the aluminum tariffs. But even if Canada manages to iron out a new NAFTA agreement and we're fine with Washington, we probably need to take a bigger view in this country about the fact that the U.S. might be going to war with China over trade, with Europe. That could really set up a tumultuous year, I think.
No question about it. And at worst case, or at least case, we're going to see that continued volatility, right? The tariff situation is not going away. Regardless of what happens with NAFTA in the next month or so, it's not going away. And like you said, maybe it gets abated for Canada, maybe for Mexico, but our trade, the U.S. trade with the rest of the world here, that is going to be a contentious debate, for the foreseeable future.
In terms of some other areas that you're being cautious on, I believe the defense stocks, you're saying approach those with some caution.
Yeah, I think that those have gotten a little bit ahead of themselves. Look at stocks like Boeing, Lockheed, Northrop. Over the last week or so on the big market rally, these stocks didn't really rally so much. In fact, they've really struggled. So I don't think it's a long-term sign that there's anything wrong with the space. I just think that the defense sector, based on the Trump's outlook and potential tariffs here, I think they have gotten ahead of themselves quite a bit. And on any market rally, I don't see those keeping up. And if we do see any sort of market decline here, I think those are the first stocks that really can get hit significantly.
We had some news. You said you like the U.S. financials for a number of macro reasons, but obviously at Goldman Sachs, seems we're going to be getting a changing of the guard at some point this year. Nice long transition, reassuring for investors. There's an heir apparent now named to Mr. Solomon.
Yes, it certainly is. And Goldman's track record, for 100 years has always been to hire from within. So, I know there were prospects of Gary Cohn, maybe some other outsiders coming in, but I think that the market is somewhat relieved to just see, yes, it's one of the insiders, someone very, very well respected, someone that is highly touted from within, and just, smooth transition, like you said. Again, whether it's this year or there's even some talk now that it's not going to happen this year, that it could be out to next year. But regardless, the plan is in place, and that'll take that sort of, nervousness, any sort of nervousness from the marketplace out of the mix there.
You mentioned Gary Cohn, of course, formerly of Goldman Sachs, and when he departed the White House last week, a lot of people thought, well, maybe he's going to be the successor. And then President Trump at one point, I think last week, saying Gary might be back. I guess Mr. Cohn's future is something of a sort of hot debate among traders and investors.
Yeah, I think, President Trump saying that is probably more just wishful thinking than anything else, and trying to just smooth over what has happened with Gary Cohn over the last few months. I think what he's going to do personally is he's going to take some time off. He's going to write his book. He's going to get a sweet deal there, and he's in the driver's seat, right? He can pretty much call the shots for where he wants to be on his next move, and he'll see what's offered to him.
Interesting times indeed. Thanks for talking with us, Scott.
Great morning to you.
That was Scott Bauer, CEO of Prosper Trading Academy, joining us from Chicago.